Hey everybody, DayTraderRockStar here, and a video here to kind of go over the trades, do our homework like we do each night. We kind of review the trades that I've taken, hopefully you've taken. They're all based off of pretty much the 1, 2, 3 high probability setup, playbook trade, I call it. The criteria is there for it: the divergence, the triple stochastic rotation setup, and the bull and bear flag, the 2020 bull flag. Those three I tend to be looking for. And some other times we could get some other patterns. Like today we had a nice falling wedge pattern playing out. 2 falling wedges played out today, and they worked out exactly as expected. So we'll review that today. We'll review the falling wedge. Markets are live right now. It's 8 o'clock. Charlie's about to get on to do the show, so maybe if I get this out early enough, you'll be able to get back on DayTradingRadio.com and pick up Charlie's show. He's been doing a great job doing a Wednesday night show. I happen to be at the office, so I'm going to do this video, and I'm working on the bot scripts and stuff like that. And for those out there not a member of Day Trading Radio, head over to DayTradingRadio.com, try out the membership. It's a 10-day free trial, no credit card. You'll see a link right over on the main page, right next to the video player, and it'll let you into our dashboard, get the chat rooms, the Rockbot, the tradeometer, all the tools, get the instant alerts, the high probability setups, and the list goes on and on. The news, the tick strike player, everything. Anyway, you got to see it to believe it. So head over there at DayTradingRadio.com, get that 10-day trial, check it out. If you end up liking making money with us, we're making money each day, then be part of the site. So today came in pretty disciplined. We knew that it was the Fed day. I think we all knew that it was a Fed day. So we came in understanding that it's going to be kind of volatile. I think we were all in agreement that we were looking for a little push up higher after the Fed. I honestly, from what, talking to Paul and some of the people, I think the overall feeling was a bullish move after the Fed meeting. And that's what we got, a big move. We got a big move, huge. We're going to go over that in the candles. Then that sets us up nicely for tomorrow. And we actually got to one of my targets today. We did get up to 4,300 on the cash. So the 4,300 was a target of mine. We tagged it almost perfect. I still think we could go higher. But, this market has played, tennis with these markets back from cross court. One day it's up big, next day it's down big. Up big, down big. So I'm not putting anything into tomorrow's day. We could sell off. But what we trade while the market is doing what it's doing is it doesn't matter if it's selling off. It only matters if it's selling off. It's kind of affecting things that you might be holding. But we're going to be a little bit more short-term traders during this volatility until things kind of clear up a bit. So let's go back, take a look at the day here. Now you can actually see there was a beautiful wedge pattern here. And during the show I was just discussing a wedge. We don't see wedge patterns that often, so it's when I do recognize one, and it's basically self-describing, has a nice downward trend line that's kind of coming down, and the one here is not parallel, it's kind of cutting in a bit. And you'll start to see it develop, and this was a really good one. We tagged it here, and when you have these things, and again, I've traded since 90, patterns like this, probably back in the 90s. I started really getting into the falling wedge and understanding all about, the measured moves out of a wedge pattern, what it represents, how good it is when we have a triple stochastic rotation, how good of this is when we have a divergence in a wedge. It's absolutely fantastic. So when I see a wedge, I'm always looking for that bottom. And another thing that I've learned over years and years of doing it, just doing my own studies and keeping my notes and doing back tests and stuff, that a wedge pattern, if you complete that wedge pattern, it comes down to a point down here. That would be considered 100% of the wedge. If you got all the way out here and this came all the way out. And you start to begin it, take a look at the beginning of the wedge and the end of the wedge, it's way down here. And then you cut your 50% mark, and then between the end of the wedge and the 50% mark is that 75% mark. And and you've heard me say this for 10 years at least. Wedge patterns break out 65 to 75% into the pattern. you have the highest probability of a breakout of a downward wedge pattern to the
Connection
upside.
lost.
So when you get down to that level, it's go time. You should be taking that trade, knowing that's usually the reaction of these patterns. And we took that trade. And that was the best trade of the day. And it got a nice little bounce on it. And, what to say. So that after that, the market... Paul came on, and the market rallied. Rallied here. So I went to lunch. I took Dawid and Geronimo to lunch today. When we got back here, I started getting back involved in the markets again. And this is a beautiful, channel that was playing out. It's the 1, 2, 3 channel. And there was another kind of a divergence here. It was a really good divergence for 230. You could see it basically on the 60-10, which qualifies this for a 5-minute divergence, which is much stronger than the 1-minute divergence. The 1 minute's not really there. It's the 5-minute that was showing up, and that was a big reversal. And again, you can see the huge move from that. Pushed up against, and we rallied hard. And this was during Jay Powell's speech. So there was a catalyst here to help us along. That's the beginning of his commentary and stuff, and the market just took off from there. I'm just going to go back here a second. All right, just today's chart. Profit today, $333. That's not all on the MES. MES only gave me like 30, 40 bucks of that. The rest of that was off of I do believe two trades on Airbnb. So Airbnb, and it was, what did I trade today actually? Let me look at my things here. Yeah, all right, so got in this morning. Oh, the Pinterest, that was good. That popped here nice today. So, again, today is May the 4th be with you, Star Wars Day. I bought some of that RVSN early this morning. It was one of our pre-market movers. I bought it right at the open, 9:30. I'm still holding on to it. It's a cheap stock, 223. And then on the pullback on Airbnb, I bought 30 shares at 151. And then ended up selling my Pinterest. Nice. We made just about $200 on that. Just holding that overnight, 200 shares. Got that big bounce on it. Just took it off. I didn't even look. I just saw it up there, and I said, you know what? I'm almost up to, at the time, I probably could have got a little bit more, but by the time I got out, it already started falling. And we took that out for 196. So it was a couple other things. And then sold the Airbnb again after it popped. 155 for another 124. So there was a couple trades in there, but they were all, I think they were basically almost all scalps today though, which is nice. But I want to go back here, and we're just going to take a look at what we're looking for in the market. This is where the Fed came out, and I was just, in the chat room I was saying I was going to look for a fast short after it kind of just whipped around, and I tried to, I got a short in there, and it dropped. I got two and a half points, but I wasn't playing really with too much. I only had a contract on, so I didn't want to get chopped up. So I just took it right off, and I'm trying to apply the rules here. Remember the rule? I think this is the most important rule you could going forward. Just one of the most important rules in trading. If you're going to trade this style trade, trading for, I call it trading for income, trading for daily income. Trying to just build as much up as you can on a low account. And hitting these scalps. The market very volatile today, right? So I'm not pushing a lot on the trades, but when things get a little calmer, these setups will still be there, and it'll be much easier to scale in and scale out of positions. Maybe even tomorrow we'll have a more interesting day. But look at this. Look at the entry today. This is what I call a triple stochastic rotation, and where they all came down and they all got oversold. And I'll show you this on the other chart. And I just took it on the triple stochastic, and got a nice run on it. Look at it was the bottom. I called the bottom today. Traded the bottom, got out in 2 points. Yeah. Back over here, there was something going on. I didn't like it. I realized I bought into the stochastic rotation here, so I automatically took it off, and I did the right thing. I did the right thing because it ended up coming all the way down. So remember, the key here is buy the rotation, oversold, starting to turn up, much better to be long, much better to take your profits also when you get above that 80 line, especially if the market's been trending in a certain way and you see a rhythm to the markets, at one point you will break through, and that's when you really kind of start to count in your 5-minute time frame. You always have a better chance of making that bigger move when you have that 5 minute is on your side and not pointing down. So this had all the characteristics of a bigger move. So, and again, just sharpshooting the markets like this is what I like to do. But there was a couple that I missed. There was again, I'm just looking at the market, watching it going down, and typically I am looking at a setup like this where I could see, kind of a line down there, and then you can make this real tight. So now I'm starting to watch each one of these candles compared to the other one, and nothing really there that's jumping out at me. I think there was a slight divergence here. Let me get rid of that volume line. Wow. I didn't see that one. That was at right before the open too. So I like to go back just to make sure we didn't miss anything. I think there was one that I think that right here you have a low and you have a higher low. It was tough because it was on that 20 line. That's where I draw the line. You got to draw the line somewhere. Trying to take them above the 20 or 20. So that's it. Didn't miss too many. Market did run a lot. Didn't take advantage of the trend market, the big trend. Just getting on board, knowing that at one point we knew that the shorts were stuck and they're probably going to get squeezed up a little bit more. There probably was some points that we could have grabbed here, but I think that risk reward is, at that point coming into the end of the day, you're like, nah, did a good day. Everything was working out pretty good. Let's go. Wow, look at this. This is kind of weird. It's pretty tight overnight here. All right, well, that's it. I wanted to show you those. We're going to stick to the rules. I'm looking at that other chart, and then I'm comparing it to my Medved chart. My Medved chart, because I already have some big pivots already played out. It looks like a totally different chart with these two big range opposite end pivot areas. And now we're kind of tightening up into this. I was just looking at that before. But that's going to be it. Like I said, if you have any questions, please ask them. It's the best way to learn. And we'll see you in the markets. Don't forget DayTraderRadio.com, broadcasting the markets live every day and at night, as I am here. This is a real good, consistent way to make money. You just have to outline your business plan, and I help you, I do that for you. We have everything accounted for on a good trading methodology, call it what you will. We have everything detailed and just planned out, so all the moves are covered. It's just about the mental game and being understanding of the overall trend and the volatility in the market, because sometimes you can get bigger moves and you have to compensate for that. All right, that's it. Enough of me talking. I'll see you guys in the market.